Okay, let's just get right into it. Think about it. You wake up early, you go to work, you do everything you were told was the right thing to do. And yet, for so many of us, there's this quiet, nagging feeling that despite all the hard work, we're just one bad month away from some real stress. Today, we're going to break down exactly why that traditional career path was never really designed to make you wealthy in the first place. This is the question, isn't it? The one that just sits there in the back of your mind. It's that feeling you get when a paycheck comes in and then just seems to vanish. You're following all the rules, you're putting in the decades, but somehow financial security feels just as far away as it ever was. Well, the uncomfortable truth is, that feeling you have, it's based on reality. So let's start by looking at the promise we were all sold. You know the one. And let's get into why, for millions of people, that promise is quietly breaking down right before their very eyes. I mean, we were all taught this exact formula. It's so simple, right? It's predictable, and it was supposed to be safe. This was the blueprint for a stable, successful life. The only problem is, the world this blueprint was designed for, well, it doesn't really exist anymore. Now think about who this number represents. This isn't just people on the margins. This 40% includes people with full-time jobs, people in their 30s, their 40s, their 50s. It just goes to show how widespread this financial fragility really is. So the question becomes, how can someone work for decades and still be in this exact position? Well, the answer to that question lies in some very simple, but very uncomfortable math. This right here is the core of the entire 9-to-5 trap. So let's start our little breakdown with a totally solid, respectable salary, $60,000 a year. That's actually more than the median income in the US. Now, after taxes, that might leave you with, let's say, around $45,000 to actually live on. And you know what? Let's be generous. Let's say you're a fantastic saver and you manage to put away 10% of your take-home pay. That's $4,500 a year. That is a way better savings rate than most people manage, so we're really starting from a strong position here. Now, of course, you're not just going to stuff that money under a mattress, you're going to invest it. With a solid, let's say, inflation-adjusted return of 7% per year, over 40 years, your savings will grow to roughly $900,000. I mean, on the surface, that looks like a lot of money. It feels like success, doesn't it? But here's the catch. Here is the trap. That money has to last for your entire retirement, which could easily be 20 or even 30 years. And when you start to factor in the massive rising costs of healthcare, the constant bite of inflation, and, well, all the uncertainty around Social Security, that big nest egg starts to look a whole lot smaller. For a lot of people, it's just not enough. Okay, so if the math doesn't work out, then why do so many of us stay on this path? The answer isn't just financial, it's actually deeply psychological. Here is the fundamental difference, the core conflict. In a 9-to-5, you are trading your time for money. It's a straight-up linear exchange, and you only have so many hours in a day. Real wealth, on the other hand, is built on compounding systems, assets that are out there working for you around the clock, whether you're at your desk or not. You know, the reason we stay is that the 9-to-5 gives us just enough comfort to stop questioning the long-term plan. That paycheck is steady, the routine is predictable, that occasional raise, it feels like progress. The trap keeps you busy, it keeps you tired, and it keeps you focused on short-term survival instead of long-term strategy. Psychologists actually have a term for this. It's called status quo bias. It's our brain's default setting to just prefer things to stay the same. We stick with the path we know, the familiar one, even when we have all this evidence that it's not actually taking us where we want to go. The longer you're in the system, the harder it is to imagine anything else. So, how do you break out? Well, it all starts with a fundamental shift in your mindset. This is the pivotal moment, right here, where you stop thinking like an employee and you start thinking like an investor. This is the single most important question you can possibly ask yourself. It completely reframes the entire goal. It stops being about the size of your paycheck. It's now about how much of that paycheck you can convert into assets that generate income completely independent of your time and your effort. Seriously, let this one sink in. Hard work is honorable, it's necessary, but hard work alone, when it's just traded for a salary, very rarely leads to wealth. Wealth comes from owning the things that produce value. Stocks, businesses, real estate. It's all about ownership. Alright, so that was all the theory. Now let's make this stuff practical. Here are the first actual concrete steps you can take to begin building a future that isn't solely dependent on your job. Okay, first, see your job as a tool. It's the engine that powers everything else. It's not the destination. Use its income to fund your assets. Second, every single time you get a raise, increase your investment rate before you upgrade your lifestyle. Third, focus on boring, consistent investing, like index funds. It's not sexy, but you know what? It works. Fourth, start building just one small income stream that isn't tied to your hours, like dividends from stocks or something similar. And finally, number 5, think long term. Think in decades, not months. Building wealth is slow. Just remember this: your job provides the income you need to live today. That's crucial. But it's the systems you build and the assets you own that will ultimately give you the freedom to control your own time tomorrow. And that right there is the real definition of wealth. Look, the point of all this isn't to tell you to quit your job tomorrow. It's to get you to stop assuming that just putting in the time will solve your money problems. The 9 to 5 isn't evil, but believing it's enough, well, that's dangerous. So the real question for you now is, what's your first step going to be?